Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago office on a nice, almost fall day in the Windy City. Speaking of bluster, joining me, as always, from Texas, Director of Feed Procurement, Mr. Jake Kingsley. Jake, how are you today?
I'm doing okay, Jim. I was better before I got here.
That's fantastic. That's what most people tell me. Jake, it's just you and me today, buddy. All your dreams come true. You and I on a podcast, on a show, talking grain and feed markets. But before we do, Paige, if you'd kindly timestamp the broadcast, it is Thursday morning. Markets are down today. We had a little bit of a rebound in Chicago yesterday. On Wednesday, screens were mostly green. But as we look at the screens here this morning, screens are bright reds. We have another move lower across the ag markets. Now, not all commodity markets had been trading lower this week. We've talked about this with a few clients over the last couple of weeks, really, Jake, but crude oil, somewhat being the outlier of commodity markets, if you will, continues to find strength. It's been hovering near that $90 per barrel mark, pulled back slightly earlier, but we're still holding that $90 per barrel as we head into fall. We have a lot of folks already sending pictures at gasoline stations, what the pump prices are looking like here, how things are looking on their bills on the farm when we talk about their diesel usage and nat gas usage and all that good stuff. So an interesting pain point as we head into the fall. We're happy to see feed prices under some pressure, but we got to keep an eye on energy and, of course, all things interest rates. We heard from the Fed yesterday, keeping rates unchanged for the moment, but suggesting that we could have yet another hike maybe before the end of this year. We would hope then that those hikes somewhat plateau as we begin 2024, but we can only hope. Jake, let's talk about the feed markets here. We have December corn futures. Again, a nice move yesterday back into the 480s, but have pulled back towards 475 as we record. We have December wheat. We thought for a bit was going to hold $6. That has really come under some serious pressure over the last few sessions and are now down towards 580 on December wheat. So one could argue even dragging that corn market down with a little bit. We've got no beans now hovering right at $13. We'll review one of our bull predictions from last week about that market. And December meal, that stubborn little byproduct, is now back to $3.90. It has managed to hold that. And as we've traded under it, we've noted to clients and prospects and friends that we talk to that we have not lasted very long trading below that number. So we rallied back up right towards $400 a ton. Yesterday, we were at $396 this morning, but right back to $390. So some key markets that you and I are watching as we start to wrap up this week. Vril noted last week that we still have a stocks report here at the end of September. So that'll be the last Friday, a week from tomorrow. We're recording on Thursday, a week from tomorrow. So that'll be stocks on and off farm as of September 1st. So a key report coming up as we try and monitor really when these grain and feed markets are trying to find their lows, their seasonal harvest lows as we move in through the end of September. Jake, what's on your mind this morning as we're talking these feed markets? Futures moving a whole bunch here. Basis maybe not necessarily so. So what are you looking at here today?
Man, I think we're just trying to be mindful of the plans that we kind of set in place earlier on in the feed year. And I think you and I had kind of gone back and forth a little bit over the course of the end of last week and the start of this week as we returned to some of these low tide marks, setting some new low trades in the corn contract, and then revisiting, like you said, the 390 area in December meal. Do we come in here and start to get aggressive in the second half of the feed year and start to get more feed bought while we're down here? or do we kind of wait patiently and take the purchases that we do have on? We've had a lot of folks buy a lot of October to March proteins and get something done in the first quarter or first half of the year in corn and manage the rest with options. Do we come in and add another layer, start to get aggressive while we're down here? Is this the last look at it? Seasonality charts tell you, we're starting to put in some lows for the year in this window. But at the same time, we're seeing some reports out of harvest that some corn yields are pretty close to average, not a disaster by any means. We're not going to have a record crop as we had projected at the start of the crop year, but the yields are there. Now, the bean yield looks like the early numbers, and again, these are anecdotal and they're all over the country. And so it's hard to really project what we're going to have at the end of the day with what we've got so early on. But it feels like there is some warrant to the concern for bean yields being reduced again and thus tightening that and the protein balance sheets as we work through our harvest window. So I think we had kind of settled on be patient. Overall, fundamentals haven't really changed yet. We've done a lot of hard work to get folks in the good positions that they're in today. So let's not overreact to this move back down into the lows. Let harvest get rolling a little bit here and just be mindful of the plans that we'd set in place. So I think that's what we're focusing on right now. We're seeing some crop progress. The first bean crop progress update came out on Monday afternoon. We had our second week of corn numbers come in. So we'll see how that progresses and see how these yield numbers start to roll in as harvest starts to pick up over the course of the next few weeks, I think, before we make any major moves as far as feed procurement goes.
Good deal, Jake. Yeah, you noted the harvest progress report. So for everyone's reference, that comes out every Monday afternoon from the USDA. This is the same report that we review almost weekly in terms of the crop conditions report throughout the summer, especially as we entered our drought period. We really focused on that conditions report. How bad were things in the Midwest across the key growing states? We saw those conditions come down to some of the worst conditions that we've really seen since the last big drought of 2012. So all eyes have been on those numbers. Now we kind of start to, conditions are still important, but what all eyes are really focusing on now is harvest. And as you said, Jake, it's early. This is only the first week that they released a bean number. So we're really only at, 4 or 5% nationally. Corn, we're edging up closer to 10% and beyond. Those numbers will start to accelerate right over the next few weeks because we're really going to be running it depending on how much rain some folks got here across the Midwest. And excellent points on harvest. Initial harvest numbers, they're not fantastic. They're not horrible. They're not fantastic, right? So it's kind of been that back and forth of, I'm disappointed, but hey, man, it's been worse before. So you also keenly stated that we seasonally see pressure at this time because of harvest, and it's important to be patient and not overreact on price swings because the fundamentals themselves have not changed, right? We digested the WASDE report last week on the show with Verl. So what we trade and markets trade based on what the government gives us in terms of what that balance sheet looks like. And to reflect that soybean balance sheet remained tight, I think we all analyzed and determined that there is room for that balance sheet to get tighter. Whereas on the corn side, it loosened. And as we determined through analysis that it feels like that balance sheet can get looser. So if we rally December corn futures back to 485, it doesn't mean we're in a sudden reversal and panic back to 550 corn. And if beans do happen to break down towards 13 or meal back, sub 390, it doesn't mean suddenly we become awash with beans and, the next stop is $300 meal. So a lot of fluctuation in the marketplace. We're used to that type of volatility. That's why we do what we do. But very good point, Jake. Stick to the game plan here. We had a lot of folks very successfully step in and own protein at what is now really has been the lows, even on this break today. And that's from a basis and futures perspective. And corn, if you have been wide open up until now, we said, hey, 470, why don't you step in and own that here, depending on how basis looks in your area. And for those that have already purchased some corn before, we know that on rallies, we can own puts to protect any potential downside movement. And if you do want to keep that downside open for purchases, we've been using calls and or call spreads as we look out into that, Jan, Feb, March, and April forward timeframe. Talking about the volatility here, price movement has remained very active. Actual volatility within options has kind of decreased a bit over the last few weeks, just as corn has remained a bit stagnant and in this range. So perhaps maybe just owning outright calls to protect that upside. Premium has gotten a lot cheaper for, some of that ceiling creation, if you will, looking forward. Jake, just to focus on a couple points that people have been talking about really across the country, not just a Midwest issue, but the river levels across the Mississippi. Any quick takes on what's happening there?
Yeah, I mean, we're hearing from friends at some of these export terminals that they're just expecting a total disaster as far as logistics are concerned, especially as harvest starts to pick up. Water levels are nearing historic lows. River traffic is being stymied very far south relative to what we would usually be dealing with, even with low water levels. And so it's going to be tough to get product out in a timely manner. I think we're seeing that along the river with the grain buyers backing off some basis numbers there. We're seeing some response, I think, from the export buyers. China has been very active in Western Canada, buying up canola out of that part of the world. I think if not for a hedge, for it's maybe not even a hedge, it may be the only source of product for a little while. And so we're seeing a lot of Canadian canola move out of that part of the country at a premium of $15 to $30 over what folks are really willing to spend on it in the US. So we've been having a conversation around moving away from canola and into soybean meal in the dairy ration for a lot of folks. If not now, for the second half of the feed year. I think that could become more relevant if the river stays the way that it is, and maybe we get a chance to add a little bit of tonnage back to our soybean ending stocks here in the US by way of not being able to ship it out. We just physically can't move it. So maybe a little bit of an opportunity there, but at the same time, typically when the river is moving the way that it is, you start to see an increase in demand in rail freight. So our folks that are in the West that were maybe waiting on a little bit of a break at harvest are starting to look at this thing and seeing basis numbers that have kind of bottomed out and flatlined. And it's probably time, if you hadn't, go ahead and get some of that stuff cleaned up, because any break that you catch at harvest from a surplus of product hitting the marketplace could be offset by higher freight costs of moving rail back to the West. I mean, not only higher demand, but as we talked, crude and fuel prices seem to be creeping up here in the last few weeks. And so then you're going to see those fuel surcharges start to jump up, and all of a sudden any break gets washed away by increased cost of moving that product.
Yeah, that's right. I mean, basis, as you know very well, Jake, I mean, that is a delicate ecosystem at times around the country. So, your gut reaction may be that, hey, if they can't get these barges downriver, then they'll just kind of be stuck in the Midwest. And hey, if I'm a buyer, that's great, because now it's all just sitting here, and that's fantastic. As you noted, though, that ultimately the system just readjusts. So if those purchasers of U.S. grain from a foreign perspective cannot get it out of the Gulf, but they still need it, it will have to come from elsewhere. Maybe that's the PNW. So the grain will just ultimately shift to different areas, right, of the United States and to different export terminals. Basis is a local number, but it is dramatically affected by everything happening throughout the country, as also our neighbors and, of course, our foreign buyers of our commodities. So great points there, Jake. We've already touched on how energy prices, potentially play into that. Just think of where we were a year ago. River levels were low. We were dealing with, the rail issues. We were dealing with freight issues at that time as well. Labor tightness. I mean, you name it. So there's never making it easy for us, right, Jake? There's always something that we've got to analyze here. Speaking of not making it easy for us, we had some pretty bold predictions on last week's episode with Verl, right? So shout out to Phil and Kathleen at the Dairy Download podcast. They have their bold predictions. We've been doing them somewhat weekly here in lieu of trivia, I suppose, but mainly because markets are moving, right? I mean, the corn market has kind of been stuck in this range, but holy smokes, the soy market has been all over the place. So we had a very narrow range last week on our corn prediction. We were pretty much trading 480 a week ago, I think, when we recorded. We're back to 475 now. You and Verl were in between that 460 to the downside, $5 to the upside. It's been a week. We have not hit either of those levels. So I'd imagine if Verl was on, maybe his sentiments would not change. We flirted with it. We got to 470, but popped right back up into the 480s. Then we pull her back. So, I mean, do your sentiments change there? On if you've got 460 to the downside, $5 to the upside, you predicted $5 first. Do you still hold that view?
I don't know. I might be shifting to the 460 side, and because of the way that this bean market is starting to act.
Yeah.
One of the things that we watch is the relationship between corn and bean futures, and for a long time here, like several weeks, maybe even a couple months, November soybean futures were right at 2.8 times the value of December corn futures. And while we said, the markets have been kind of quiet for the week, it's not a huge move, but over the course of the last 7 days, soybeans are now only 2.7 times the value of corn. And so it makes you wonder, which one of these is going to drive this market for the long term? Is it going to be this big, fluffy corn ending stocks, or is it going to be this razor thin soybean ending stocks? And it feels like maybe corn is a little heavier than the beans are thin. And so I'm maybe starting to side with Verl here. We go to 460 corn, and that puts a little bit more weight on this bean market and kind of keeps it a little more suppressed. Again, maybe with the backdrop of an inability to export some of this product.
Okay, and I think one of the items we noted last week was perhaps one of the more bullish elements of the corn market was the bean market, right? And that sounds real goofy to say that, but it was the case. As long as you had beans super elevated, up near 14 and beyond, which they were, corn was being held at $5 and above. So you talk about that. The extreme is that 3-to-1 ratio, right? Of you take November soybeans and divide that by December corn pricing. The extreme is usually 3-to-1, right? We were about 2.8-ish last week. We've brought her down to 2.7 as we trade this morning, as we record. What's super interesting then is that we have bold predictions on November beans, and we got blown out. I mean, you and Verl $14 first and not $13.30. We were trading $13.60. I would have sided with that as well. And we've torn her all the way through to $13. We're actually trying to trade below it right now. There is a 12 handle here at the moment on Nov beans. So to take some of that steam out, it helps maybe kind of drag the corn market down with it. So has your stance overall changed on beans? Like, is $13 a screaming buy opportunity, or is it still this is feeling pretty red, don't catch the falling knife, give her a chance to hit 1280 or so?
I don't know. I think it's still a buy down in this area. I think maybe corn is leading the way for just a moment, but the second that we come in and cut these bean yields, which again, it's early, but anecdotal evidence tells us that they've got to cut this yield. The second that they cut that, I think these beans take back over and start to run.
Yeah, and I think there's a reason if you look at these seasonals over a 5, 10, and 15-year period, one of the reasons we do find our lows and our pressure during harvest is because we are still guessing, and not just you and I mean, the market, the industry, the world is guessing what actual yields are going to be still at this point. All we know is that the market is being flooded with supply. So that's all we know. We don't know how much, but we know supply is suddenly back. So that inherently then puts prices under pressure. And again, seasonally, from a historical perspective, that's why we find our bottoms pretty much between now and that first week of October, because then you usually get a WASDE report that like second week of October, starting to confirm what actual yields were looking like, what potential demand scenarios would look like. And we then also have another month of hearing what our farmers are reporting to us in terms of what real yields are. So yeah, that bean yield number is going to remain a very fascinating number as we move forward. We did a couple football predictions. I think you had the Chiefs winning in a shootout. Did they win in a shootout?
I think you corrected me. Not a shootout, but a close game.
Yeah.
It ended up being close enough.
Yeah.
It felt very close.
That was a bizarre game. I mean, and I cannot, speak really with any credibility on football at the moment because I am a lifelong Chicago Bears fan. So just to throw that out there, Burrow very wisely predicted that Tampa would win that game. I, on record, said Bears by a field goal. And now this week, we go head-to-head, Jake, and holy smokes are the Chiefs favored, as they should be, in Kansas City. What's your bold prediction for Sunday's game? Bears at Chiefs. How bad is this massacre going to be?
I always get upset when I bet for the Chiefs. So I'm going to bet the Bears to cover the spread. They get 12.5 or 13 points.
It's a big spread.
I think they can cover. This is the NFL. Their defensive coordinator just took leave of absence, actually resigned. Maybe the FBI was involved. We're not sure. Maybe these guys play a little bit of inspired football and keep it a little closer than Vegas thinks. Yeah, I think the Chiefs are still going to win it.
As a Chicago and Bear fan, that news stream yesterday was pretty wild. Things got out of hand pretty quick, which they often do on social media. At one point, it sounded like just the entire franchise may have even resigned and just like called it in. And now there's one less team in the NFL. That's how they play anyway lately. But it does sound like the defensive coordinator's gone. I don't know how inspired you can be, buddy. I think it's going to be a rough one. Just to entertain the viewers, I'll say Bears by a field goal. But I think the bet you and I made on the side knows how I truly feel about this game. It's going to potentially it's going to be a tough one. So we'll see what happens on Sunday afternoon. Hope everybody enjoys their nice weekend ahead. I believe fall starts this weekend, right, Jake? Is fall on Friday or Saturday? When's fall?
Is it the 21st? Might be today.
Is it the equinox? Does the equinox land on the 21st? You're on the Google machine. The producer in our ears, Paige, says it's the 23rd. So it is indeed Saturday. So the next time we record, it will be fall. So happy fall, everyone. And Jake, excellent work today. This was a very nice dialogue. Always a pleasure to work with you and speak with you. Great to have your insights. And we'd also like to thank Corey and the Everag Insights crew for their support. And thank you to Paige for her production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your what, Jake?
Feedback.
That's all for today. We'll see you next time on the Grain Feed.